a mixture of credit risk and market risk. That's why it's a little bit special. And I'm heading this department. We are about 150 people responsible end to end from developing the methodology, implementing the methodology in our own systems, in our own calculation engines, in our own pricing functions. And then, also having the day-to-day risk management of these risks stemming from these derivatives business, from these financing businesses. What means daily escalation of limit breaches? What means follow-up on credit decisions? What means also deal-by-deal single approvals for more complex trades? So quite a variety of topics that we tackle there. We're embedded in the overall risk control function in Commerzbank. So my neighbor areas deal mainly with market risk and P&L calculation, and also with liquidity risk, and with valuation topics like IPV and also independent price valuation. So everything that is used and needed for controlling our trading and credit business in Commerzbank worldwide. And what I've brought to you today is, I labeled it. Let me see if I can share the presentation now with you. Find the right screen. So can you see that?
Yes, we do. Perfect.
So I labeled it from Gordon Gekko to Bristlecone, the new normal of a risk manager. And where does this title come from? I'm not sure how many of you remember the movie Wall Street with Gordon Gekko. Obviously, he made a fortune with insider trading and with not so legal ways of making money, but also at the time used the state-of-the-art information technology. So you see the computers there in the background. Obviously, not comparable to what we have today. Nowadays, our hedge funds and big market participants use advanced artificial intelligence to identify even the smallest bit of arbitrage possibilities and directly auto-execute it. So no human involved anymore in making the fortunes that Gordon Gekko used to make. And obviously, Bristlecone, the most recent evaluation of Google's quantum computer will be the area of technology that would boost this artificial intelligence to the next level. We are already with cloud computing very, very advanced in AI, but certainly quantum computers will be the next big disruption. So that's why I have this as a starting point for my presentation, because these kind of disruptions and never before seen events are the things that are driving a risk manager mad, because you can't really prepare for it, or really have to think very, very in advance to come up with that. And that's the challenge that we face. And just a little more of these kind of disruptions. I'm 39 years old, so I'm not yet grandpa. So I started with these kind of machines to work with. Now this is my daily tool that I use, especially now in the pandemic when I work from home or from my balcony or wherever. My iPad is always with me for video conferences and for all the stuff I do. I have it in my hand. It is more powerful than everything I've seen in school. So as a big Star Trek fan, I always envied Captain Picard, because he can by a single command of his voice control his whole starship. At the time, this was pure science fiction. If you see today with Alexa and Google Pod and Siri and the like, it's reality. You can even with Commerzbank, you can by a simple voice command transfer money to your friends, or buy shares or sell shares. Everything now by voice command. So it's really becoming reality, and that is what is driving us also to reinvent our view from a risk management perspective, because you have to be prepared for these things, because they also happen in markets. So that's where we get into in a moment. Last topic on basically big jumps. CoBa. I just come out of a discussion with our tech foundation. So the guys that deliver our technology stack. We still have some COBOL code, and not sure how many of you would recognize that here, a COBOL code working the heart of the bank. But obviously, yeah, that's for grandpas to keep them busy days and nights. So many lines of code just to get hello world to the screen. If you compare it to what we do in our day-to-day work with, for example, just picked out an example, the scikit learn that you have in Python, where you can, with one single line of code, import one of the most powerful libraries for advanced machine learning with one line of code, and then you have it all ready at your hand. So that's the kind of work environment that we are actually in, and where obviously you need to very quickly adapt to these new topics, because in 2 years' times Python might be already outdated and something else comes up, and so we are always challenged to explore new ways. And I'm quite fond of my people that are challenging this always and finding always new ways of getting better. I said that also market disruptions happen from time to time. I've plotted here so they get a little bit more into banking content now with after the pictures. I've plotted here the spread of US dollar euro for a cross currency spread. That's basically a cross currency swap is a very commonly used derivative to refinance in a different currency. So European-based banks use these cross-currency swaps on a day-to-day basis to refinance their US dollar business. The other way around, US dollar banks use it to refinance their euro business. And as you see here in 2003, 4, 5, there was not really a risk attached to that spread. So the risk was not existent that there might be a shortage in liquidity between euro and US dollar. And then what happened? Lehman crisis, financial crisis, and suddenly this spread exploded and made a huge problem for all the banks that have not yet insured long-term their funding via these spreads, because now they have to pay 100 times, 200 times more for their funding. So suddenly from one day to the next, a new risk factor came into play, and that needed to be modeled from the time onwards now. Beforehand, it wasn't a no risk model. Now it has to be covered in the risk model. So for our modeling guys, quite a big challenge, and also for the market data to collect that then afterwards. Same was true for derivative pricing. In the good old days when I was still selling derivatives to corporate clients, you got your price from your sales desk or from your trading desk. You put on your margin 80 basis points, and I knew, okay, I tell the client 80 basis points on top of what I got from the trader. I knew that this is what I will make over the next years that this derivative is running, because it was more or less gross for net margin, because no other objects played a role in derivatives business. Then a lot of new regulation came in place after the financial crisis, where suddenly CVA and DVA came into play to take into account the counterparty risk from both sides of the trade. Funding, so FCA and FBA funding certainly became, as you have seen beforehand in the spread example, funding costs suddenly became a topic there. Risk rates were increased, so risk costs certainly now played a bigger role here. Leverage ratio was introduced, bank levy was introduced, a lot of things that suddenly eroded your margin to just being 22 basis points from your original 80 that you have printed towards your client. And this is not only true for new business, this was also true for all the business that you have made beforehand. So suddenly very profitable trades turned into potentially a loss if you haven't had enough margin in place in the first place. So also there a big disruption from more a regulatory perspective coming. The next example that really made us a big headache is, not sure if one of you has a more financial institution or financial mathematics background. The formula that you see here is a pretty easy, straightforward valuation formula for derivative valuation. And it was used everywhere because it was based on the Black-Scholes formula. it's easy to solve. You don't need a lot of computational power, and it was market standard. So everybody priced by this formula. But what happened then in the early 2019, 2020, suddenly interest rates went into negative territory. So you now might say, okay, negative interest rates, not thought of it, but what does it make a difference? If you put a negative number into a logarithmic term, suddenly your formula doesn't work anymore. So by one day to the other, all the pricing functionalities in all the spreadsheets of the traders, of all the valuation systems stopped working. And you had to find overnight basically other solutions, and a whole new market standard needed to be developed of how do we cope in derivatives business with negative rates, because our market standard formulas don't work anymore. So another example that shows you risk managers need to adopt quickly and be also innovative in working the financial mathematics there up and down the ladder. Obviously, if you don't have closed formulas like the one that you have just seen, you need more numerical solutions. So a lot of what we do in my cluster or in my area with simulation of counterparty risk is Monte Carlo simulations, because we have a lot of products that don't work with closed formulas. So as you might know, the more paths you calculate in a Monte Carlo simulation, the closer you get, the better you get, the lower your Monte Carlo is. But obviously, more paths need more computational power. So currently, we are in my area running on-premise, so in the bank, a server farm of about 150 servers with 72 cores per server. So quite an extensive grid of calculation capacity there. It's barely enough to calculate 5,000 paths in our simulation night overnight. That's why we said, okay, let's also use more modern technology there, go from on-premise to the cloud. And we are just about to go live with our simulation now in the Google Cloud. And that's a little picture of the architecture that we have there, with a central link, our Bastion host, that is linking basically the cloud to our on-premise network, and then use native cloud technology to ramp up whatever size of cluster, so computational cluster I need for my nightly run. So I have easily 20,000 cores at my fingertips, and this with lower costs than compared what my internal department charges me for my 150 servers on a 3-year basis. And this is just the beginning, obviously, and also another example of technological flexibility that you need, and that you can't rest on what is established, and you have to rethink, and that's what we basically do on a day-to-day basis. Basically, the big question that we as a risk management team ask us every day: what comes next? And that's exactly the question I would like to ask you. Maybe not here today to come to a conclusion here, but that's why we are actively seeking for new joiners. I'm currently ramping up a new team in Prague for development and also for risk management, to give me answers to that question: what's next? And that's why we also always highly welcome students for internships or part-time student programs, because usually they bring new ideas and new answers to the what next question with them, and maybe the one or the other then sticks for a bit longer and gets attracted permanently to what we can offer. And I think from the examples that I try to point out here is that we have quite an interesting and challenging environment that we work in, and also have the cool questions to answer, and not the boring and dust covered old image that a bank might still have. A lot of what is going on here is actually very top-notch technology and methodology that we employ to even be able to stay on top of the market and still make money. When you get lazy and don't innovate as a bank, you are gone faster than you can blink with an eye. So that was basically my short, brief introduction into why risk management and especially counterparty risk is, I think, an interesting field of work. And I'd like to have a open discussion with you, or if you have questions on more, what we do and the like. So I'm more than happy to go now more into the interactive part of the discussion, if that's okay for you. And is there only two of you?
Yeah, just two of us, because there are other people, they applied and they didn't show up. So even I just sent them a reminder. So I don't know what happened. So sorry for that, but it just happened.
We can make the discussion more intense, because discussing with two people is easier than with 200. So it's your chance, your benefit for maybe a more in-depth discussion of what interests you.
So
hello, Mr. Peter. This is Nashar. I'm a just fresh graduate with a master's in quantitative methods in economics and with a minor in insurance mathematics. I also possess 2 years of experience as an operations specialist in a fully systematic Swiss-based hedge fund. First of all, thank you very much for your presentation. I have tremendous interest in especially risk management and financial markets, financial instruments, and so on. First of all, I would like to ask, do you really anticipate Python to be outdated in several years?
Usually risk factors don't disappear, they only get added new ones, so it probably will not disappear, but not of that importance anymore as it is today, I'm pretty sure, because other topics will come up.
Wow, because I'm also a very curious person and I always read something to learn new things, and I encountered quantum computers, and I'm also interested in that topic, but I don't have, I think, sufficient lifetime to focus on it, but I can just tell you something that with quantum computers, there is possible to, or quantum computers or computing provides quadratic speed up in Monte Carlo simulations. So soon, perhaps the quantum computers will just step into our lives and makes everything very different than today.
You're absolutely right. It is not only because of the pure speed that you can apply there, due to the very specific nature of quantum computers, with the not being limited to 0 or 1, as all the technology is that we know so far. It will also, and that's why it probably will take a bit longer to really evaluate or evolve. A lot of our thinking and programming, how we do things, is obsolete if you apply quantum technology. So that's why we are at the very beginning there. But nothing will last forever. But I think I also would say that at least my lifespan is long enough to see it come to fruition. But I would not rule out that the next big thing will even come in our lifespan.
Yeah. So in order not to get out of the date, I also recently learned machine learning and wrote a thesis where I predicted stock market prices using machine learning and compared with traditional statistical methods. And also new approach, there's Facebook's profit model. It's a new approach to ARIMA model. But anyway, how do you specifically make use of artificial intelligence in your department?
Especially for the deep learning is something that we're currently exploring in our day-to-day calibration. So for our risk neutral model that we run, we need to calibrate on a day-to-day basis all our market data or artificial market data that comes out of the Monte Carlo simulation. And obviously this calibration takes also a second Monte Carlo simulation embedded into the first one, a lot of computational power. So we are currently and we have also already published 2 papers together with the university on that topic, that you could use machine learning to pre-calibrate, so to say, so that your calibrator already starts closer to an optimum and gets to the optimum quicker, because it already has a narrowed band that comes from advanced analytical results. So that's a very practical basis where we use that. And also, in general, market data is something that needs a lot of quality assurance on a day-to-day basis. And obviously, in the past, you had some thresholds. Is the data higher or lower than X% of the previous day? Then it's maybe fishy, and you have to look into it. And if it's within the bandwidth, it's probably okay. With advanced analytics and machine learning, you can now bring it to the topic where you can have that that bandwidth not stable, but have it adjust on a day-to-day basis, learning from the market developments over the last days, so to get your market data automatically improved much better.
Definitely, especially deep learning or neural network models works very well in large data sets. I would like to learn more about actually your team in Prague, their operations. I mean, what do the team in Prague, or how they contribute to the team in Frankfurt? I mean,
we are currently a small team in Prague with mainly developers that maintain a core system and develop a core system there. But what we have just started now is to ramp up also the risk management team in Prague. So have what I said, this day-to-day risk management, looking into the numbers, looking in the morning, is everything work properly, escalating with the traders on limit escalation, working together with the IT developers on improving the systems. That is currently starting to ramp up, and also more developers will start in Prague, responsible then also for the core counterparty risk infrastructure. So the systems that engineer basically everything that we use on a day-to-day basis. So my target picture is there about a good 30 people or so in Prague until next year. We'll probably
But, but as you know, we still have less and less alumni of the university due to the demographic development. So are maybe those ambitions just not too high, just to have such a big team during next year?
I hope it's not too high, but you have to have high expectations, and I think we're starting from a good basis there. And our team in total in Prague is with the risk managers, the valuations, the market risk guys is already established there. So I think we can leverage on that. Yeah, but that's why I'm here today. So everybody counts, and if I think we have to be more visible, more present to realize that.
To focus the team members that are going to join your team in Frankfurt, but their extension in Prague, not developers, what specific qualities or skills do you anticipate to see?
I'm very open there, because what we don't do as others is having, for example, a lot of others, if you do nearshoring, you put simple tasks, repetitive tasks. That is not my approach. So we grow the team with the same setup as we have here, basically also in Frankfurt and London. So somebody motor racing there. We have usually a good quantitative background. It doesn't necessarily be on the very high quant level that you might bring from what you pointed out, but a good quantitative understanding is the basics, so that you have a good understanding how the valuation of financial instruments work. and ideally first-hand experience with financial products, financial markets, derivatives products also is very helpful. And yeah, then we can certainly go there also on a very high qualified level or team level.
Thank you. So derivatives markets are big markets. I mean, there are many derivatives, right? And also financial instruments. Are there any specific financial instruments that you are working with? I mean, for example,
Commerzbank is not Goldman Sachs, so we're not dealing in the highly exotic stuff. We are the trading that we do for our corporate franchise. So that's why the trading is mainly focused on FX products. We are highly active in also electronic trading for FX products, also more complex FX products, and rates products. They haven't been that interesting over the last 3 or 4 years because of the very low volatility and very low interest rate levels. So there was not the demand for more complex interest rate hedging. I think with now picking up inflation and first spikes in rates that you see, also interest rate derivatives will again grow in their importance. And last but not least, also important for our corporate franchise obviously are certain commodity products. For example, for airlines that need to hedge their fuels, or CO2 emission trading. So that's also a topic where we are active. What we not do any longer is equity. So equity derivatives are not longer part of Commerzbank's strategy. And in credit derivatives, we are only active in the more plain vanilla stuff, more to hedge our own credit exposures than to really do structuring or something like that. That's not what we do.
Thank you. And lastly, where would you suggest me to send my resume for the future availabilities in your team?
I think the presentation will be or can be shared.
Sure. So this one will be shared for sure, and we are in touch with Iveta Miturova. She's a representative of Commerzbank, so definitely to her. And if Roland Mesut is ready to send his resume, so I will get them in touch directly. So this will be the easiest way.
In my presentation, there's also my email address in there. So either you go over the colleagues of HR, or you send me your CV directly, and then we align again with HR in Prague. But we will certainly find a good way to get into a more detailed exchange there.
Thank you very much, Mr. Fischer. The presentation was truly fun and helpful.
It's good. That's good to hear. I think Iveta is also there.
Yeah, but she just.
But that's from our side, right?
Yeah.
So.
But anyway, just my question. I also had a student on consultation. She just finished the technical university, and she's got a strong statistic background. So is she also the one who could qualify for your criteria? Even she doesn't have the business experiences or economics, but she's still a mathematician.
Yeah, I think we're more than happy to speak to everybody who has a sound mathematical background, because I think that's you either come from a good business background and are a little bit weaker on the mathematical side, but maybe have worked in trading or did some interns there, or come from business administrative side. And then you get to learn from us what the basic mathematics are and methods are that you use for your daily work, or you come with a solid mathematical background, and then you will quickly learn how to deal with financial products with us. Usually this way is the easier, because building up sound mathematical background is from my point of view, the harder one, and the better general skill that you have. Whatever you can then apply on that on top, I think that's the easier way. So yeah, more than happy to also have a chat there with the other colleague that has maybe not so much financial markets background as you have, but yeah, sure.
Okay, we'll see. So I will just get her in touch with you and with Iveta so she can decide, and she will definitely get a record of this discussion today.
And the good thing nowadays with having remote working now fully being established due to the pandemic restraints that we had, it's even more easy than even if the team in Prague is not yet that big. And in the past, I would have said, okay, a new student, a new joiner should always come into a big team where a lot of people are there to have good contact and get them up to work, up to speed. Now the full team is available to everybody, no matter where they sit. So I think it's also easy to get them involved into topics that might be still more focused in Frankfurt, like for example all the methodology work. So all the hard quant work is still done in Frankfurt and will be for the time being be concentrated here because the team is too small to split it over two locations. But you can also fit into there from other locations. So maybe even we build up now 1 or 2 quants there, despite the fact that there is not a full team there on that topic, because I think we have advanced quite well on that remote working and like we do here today.
And that's true. On the other side, it's true. On the other side, people are slowly tired of being still online. Because
of course, yeah, that's why I also said I want to really grow a decent team there, because then you have also the critical mass to organically grow and also have a better identification with the company, and that's certainly a topic that has been missed over the last year with only being remote. And I'm also very happy for my next trip to Prague to visit the team on site there.
Maybe without a test.
I've got my second BioNTech shot 2 days ago, so another 10 days to wait, and then I count as fully vaccinated and can go everywhere I want.
That's perfect. And even the Czech Republic is not a danger for Germany since last week. So even though it really helps, and I hope it will just help with business on both sides.
Yeah.
Anyway, thank you a lot for your time.
Thank you.
For in the afternoon. I think Mr. really enjoyed the time.
Intense discussion then going forward.